Got the first corporate on Bazaar joining in EPACK Durables. As temperatures sizzle and IMD warns of more heat waves, AC sales have been soaring. Yesterday, we had Voltas giving a Q4 update, 2 million units sold in FY24, with Q4 in particular seeing a solid 70% plus growth. Now, EPACK Durables could be a beneficiary considering that they are a manufacturer of ACs for a lot of companies. Prabhudas Leeladhar, in a recent note, also say that room AC inventory levels are currently high. To discuss this and more, we have Ajay Singhania, Managing Director and CEO at EPACK Durables, with us. Ajay, morning. This is Rima here. First just tell us, how big of a customer is Voltas for you? I know it's one of your key ones, but could you put a number to it? And the numbers that we've seen from Voltas, are you seeing it even with your other key customers, like say a Blue Star, Havells, Daikin, etc.?
Good morning, Rima. So definitely the Voltas growth last season is something very remarkable, and they are definitely one of our largest clients. So I mean, a number to it would be difficult, but they are one of the largest. So they are our top customer. And the growth they have shown last year, the whole last financial year, is definitely remarkable. Others also, the key ones like Blue Star and others have also grown, but Voltas growth definitely is very significant.
Hi, Jay. Good morning. Good to see you. Put a number to it, right? Large, 20 to 30, 30 to 40, 40 to 50. I mean, give us a broad range.
It's 30 to 40% of our wallet share.
Got it. So that's good news then. The other question I wanted to ask you is that good to see that, one of your key clients are doing well. But this input cost has spiked up a little bit because of the China entire, buoyancy out there. How does that impact you in the near term? Could there be some pressure on margins? Because margins had moved up for you to above that 8% odd mark, and there's been a gradual recovery out there. How does it impact you? Is it a pass-through? In the near term, does it impact you though?
First of all, for us as an OEM ODM, any commodity change is a pass-through. But having said that, actually over last 1 year, the commodities had softened largely. So, I mean, compared to where the commodities were last Q1 or January, February, March of 23, 24, definitely since last 6 months, the commodities had been very stable. Except that since last couple of weeks, some of the commodities, especially copper, has shown some spike, but then it takes time before it gets translated to the market. So any increase in commodities in last week or the last couple of weeks, we'll see the impact only maybe like in June, July onwards. So that is not something which will bother us for this company.
Yeah, I'm assuming copper is right up there, right? Ajay, hi, morning, Prashant here. Copper is right up there in terms of commodities, and people have been expecting a super cycle in copper prices because of a variety of things. But we'll see how that goes along. The other issue, Ajay, and this is something that we speak with companies like Amber, etc. as well, who are big on air conditioners, right? Is the unprecedented capacity which is coming up in the industry. And so many new sort of plants being set up, manufacturing capacities being set up. And the way that some companies have responded, or at least they say, is that they're going down into smaller components and not kind of delivering the full AC, which also is a more profitable way to do it. But just your thoughts, Ajay, how is this going to impact? I mean, it just means more players, more product, more units in the market, more competition. Go on, Ajay.
Yeah. So see, I have my own view around it. First of all, it's not definitely there is some excess capacity currently in terms of the overall capacities which have been created in last 1 year. But I put it this way that 3 brands have recently expanded their capacity by putting up a second plant in South. So that's an incremental capacity which has been put by the existing players. So it's not anybody new coming into the domain of manufacturing. It's the brand themselves who put up a second manufacturing plant. So definitely whenever capacity comes up, there will be some overlap which will take time to get utilized. So over the next couple of quarters, let's say till mid of 25, we can see some overlap. But as the market is also growing, last year it grew by 15%. Again, this year it is forecasted to grow by 15%. So if the overall market grows 10%, 15%, 2 consecutive years, that means the entire incremental capacity which has come up gets utilized. So 26 onwards, we'll definitely see again a shortfall in capacity. So for the time being, there is some overlap. But then the entry barriers in this industry are so huge that for a completely new player, unknown player to come and put up manufacturing capacity is definitely very difficult.
what about existing companies, right? Instead of outsourcing, sort of making their own, making their own manufacturing units. Is that a risk you see it, as you see it?
I see as an OEM, ODM, both us and the brands, we coexist. So it is a mutual interdependence. So we are not competing against each other. We are actually coexisting. So the brands needs us as much as we need them. So it is a mutual coexistence. So we are never competing against each other. So some bit of insourcing, seems like they're trying to, they're not fighting against us, or they're not competing against us. It is just because their capacities have come up recently. There is some overlap, but by the time that capacities get utilized, they would definitely come back to us whenever they need incremental quantities.
Ajay, in Q3, your margins were 8.5% at the EBITDA level. Now that Q4 is likely to be a strong quarter, with operating leverage kick in, do you think your margins can get to double digit?
See, on a standalone quarter basis, at times it gets into double digit, but on an annualized basis, definitely it becomes difficult to sustain a double digit margin. Because
do you think
Q4 is one of the heaviest quarters. So definitely on a standalone basis, the margins can see that kind of a figure also.
So in Q4, do you think your margins can hit double digit? And what could be the kind of capacity utilization you've seen in the current quarter, or the volumes that you've produced? And how much better is it?
Yeah. So Rima, actually Q4, there was an impact of, especially since April, May, June, Q1 of 23-24, we saw unseasonal rains. So then a lot of inventory being in the system, brands then kind of liquidating inventories by December. So there was a lot of disruptions which happened in the entire financial year 23-24. So Q4 that way was not very strong for manufacturing because there were already a lot of inventories. And then delayed winter again kind of pushed the manufacturing. So, I mean, this year we see uniquely that Q1 is going to be extremely heavy than normal. So like Q1 of current financial year, we see that April, May, and even this can go till June. So April, May, June are going to be more heavier than they used to be. So there has been like a delayed manufacturing activity which has happened in this year.
Okay, so what is your current capacity utilization, Ajay, in Q4 and even in Q1? How much do you think it could rise to?
See, Q4, because we had put up a new capacity in South, so if we excluded, the capacity utilization was close to, let's say, 85-90% odd. Whereas now that in current months, we are seeing almost 100% plus capacity utilization. So that's the difference I was trying to highlight, that this year, the demand shifted from Q1 to Q4 of previous year to Q1 of this year.
Got it. All right, Ajay, you're also trying to diversify, I believe. You're looking at the non-RAC segment. So what is it as a percentage of your total business? And where do you see that number headed? I understand, I think that you were looking at commissioning a washing machine unit as well later this fiscal. So give us more details out there.
Sure. So see, already 20% of our revenue comes from the non-AC segment, which is the small domestic appliances. So now we have started looking beyond small domestic appliances to larger appliances. So we already started manufacturing air coolers since January of this year as an OEM. So for one large brand, we've already started manufacturing air coolers. So air coolers, first we see it is a very unique category. One, because air coolers currently is like 3,500 odd, the market size is almost 3,500 crores, which is 100% OEM ODM dependent. None of the brands, they manufacture coolers on their own. So in terms of size, it is almost same as coolers versus air conditioned outsourced market. So market size is same, but the critical difference is that cooler is a 10-month manufacturing as against 5-month manufacturing for air conditions. So that gives us a lot of operational leverage in terms of utilizing our capabilities, at least for 10 months instead of just 5 months. On top of it, we have now started working on washing machines as well, like you rightly said, and we're expecting to launch them somewhere in mid of September. So it's a fully automatic top-load machines is what we are going to launch first. So our team is working on it. We've already started doing the trials, testing. Everything is on track, and we expect to launch them by mid of September.
Okay, all right, Ajay. Thanks a lot for stopping by and giving us details about business. Maybe post your numbers, we'll re-invite you, and hopefully we'll get a better sense in terms of numbers for the next year. It's a tricky one, right, Ajay, on margins. We ask you, can you improve margins? Your shareholders want you to improve margins, but the customers as well may be watching the show, and then it gets a little tricky on that front. Thanks a lot, Ajay, for joining it.